Good morning, Jags. This is Fahad. Today is Wednesday, August 19th. Let's get started. I want to start off just highlighting something that should be in everyone's mind. I was talking with my team behind the doors as well that the volumes are really coming down in this market. It's become extremely quiet environment in the last couple of days. Is it calm before the storm? We do not know. Time will tell, but there's something to take into account when the S&P is now literally within 2 points of its February high before COVID happened, and yet we all know that the macroeconomic data does not match to the state of the economy that we have in front of us today versus what it was in February. So in February, for example, we had 3.5% unemployment rate. Right now, we have double-digit 10% unemployment rate. And similarly, whether you look at ISM PMIs, even though they have recovered materially from March lows and April lows, they are nowhere near than what the peak levels that we saw in February. And so tremendous amount of optimism is built in markets, and naturally it may feel a lot at this time when you look at across the technology sector and many of the places that valuation seems quite full, more than full, I should say, in many cases. And volumes are drying up. I mean, yesterday's volume was 36 million shares in SPY, 38 million shares in SPY. Day before was also about 35 million shares. Both of those are less than 50% of daily average. Last week also volume was dropping. And if you compare these levels to even pre-COVID levels, pre-COVID in the middle of February, we were looking at SPY normal volume between 55 and 65 million shares. We're seeing even below that. So I question, where is the excitement here at this particular time? It's it's very quiet market. VIX has settled into 21 range. Doesn't seem to be wanting to go down anymore. And most importantly, if you look at the earnings reaction like we saw with Walmart and Home Depot, despite significant beats, we saw a little bit of a fading action in some of those names as well. So is that something to worry about? The price, the reaction to some of these things? I do not know. Only time will tell. But I just want to point out it's become extremely quiet, and we know the seasonality is not going to be very healthy for the markets when it comes to September and October. It's always when the risk basically goes up a little bit. So something to keep an eye out. Now, with that said, I want to quickly touch upon one stock, mostly a technical update, and then I'm going to come back to this name with more fundamental view and more extended version of my discussion, either in a podcast or in a written format somewhere on the website, whether it's chat room, webinar, or an official trade idea. But keep an eye on this stock called Crispr Therapeutics, symbol CRSP. This is a biotech that we have not discussed for a long time. It's worthy of attention. Now, there is a 82-page long note from Oppenheimer that came out on a long time ago, January 12th, and I've been keeping an eye on this one. I've saved this file from a long time ago. I've been saving, and there's so much discussion here about the rise of genome testing, the gene testing environment. Major discussion on this one regarding CRSP, EDIT, what these companies are doing, what kind of catalysts lie ahead in front of us, what to expect. So there's a lot to discuss and a lot to learn about gene editing environment and what kind of future holds for them. But purely from a short-term standpoint, I want to point out that technically, if you look at late yesterday, I noticed right around 3:15 p.m., 45 minutes before the market was closing, there was a high volume spike in stock. All right, and there was suddenly a major surge, high volume spike. Somebody was accumulating shares down here. They came in at 3:15. They came once again around 3:30, and then right into the close, they did some more buying. And the stock is going to gap higher slightly by about 0.5%. And if you look at the daily scale, this has a very nice setup, sort of the same kind of a nice setup that we pointed out in Amazon before that thing blasted higher yesterday, and we all made money on this one. So here is that very tight wedge formation that is in play. If it takes out this $94, $96 level, this could be on its way to about $100 per share. I know I'm not giving you a lot of fundamental color over here, but keep an eye on this one. MACD has corrected and is now starting to show potential bull cross pretty soon. So keep an eye on these green bars. And then if you look at the RSI levels, RSI is already giving a bull cross after an uptick yesterday. Let's see if this thing takes out 95 to 96, could be on its way to $100 to $105 per share. And I will come back to you with more fundamental color about what catalyst to look out for, what's in it for the company and such. So that's it from me. Jake.
Morning, Pod. So 2 stocks to talk about today. The first one is a very quick update on Horizon Therapeutics, HZNP. This was a weekend research idea, a bullish idea back from June 7th. Stock has done extremely well, and there are some channel checks out. Came out last night actually from Symphony Health. They talk about how the recently launched Tepezza sales for thyroid eye disease accelerated further to 62.7 million in July. This is a month-over-month improvement from 50.4 million in June and 32.7 million in May. So just very quick update. The positive channel checks continue. So we'll be keeping, further eye out on this name going forward. And then, secondly, second stock is Evercore. I don't think we've ever covered this name. Ticker is EVR. Company operates as a independent investment banking company. Its 2 segments include investment banking and investment management, with its largest segment being investment banking. Now, this segment offers advisory services on M&A, leveraged buyouts, restructurings, shareholder activism. Now, this past quarter was a bit of a hiccup for the company. Specifically within advisory, revenue was down about 24%. Now KBW is out with a note today following some meetings with management where they talk about how within the advisory segment, clients have re-engaged and activity is up across the board. Restructuring activity is also high. Activism has come back and M&A has re-engaged as well. For M&A specifically, in recent weeks, conversations have picked up as companies in good financial shape are looking to reposition their strategic mix for a drastically different environment than in 2019. So we should see a much better number coming out, in a couple months when they report. And then lastly, one bright spot for the company in Q2 was their equity capital markets. And this is something the company wants to build off of. This is essentially your equity research company, where they have a exposure to biotech, and they're looking to essentially kind of build into other sectors, energy, tech, industrials. And as for the revenue potential for this business, they were out at a UBS conference last week, how their revenue target will eventually hopefully go from 75 million to 100 million. So just a bright spot from the past quarter and one to look out for in the future.
Good stuff. On the HZNP side, this has been such a huge winner for JAG clients ever since this beautiful, fantastic bullish piece was suggested in the weekend research on June 7th. And we gave everybody a 3-month time period. And June 7th was right over here with the stock around 48, and now it's at 73. And it's still a very nice tight bull flag. So the update on that is just yet another positive element. So this thing will be this thing has been just an absolute tier, monster run in stock. And on EVR, this has a technical look that if it starts to clear through some of this $65, $66 resistance, this is a nice bull flag formation after a decent rally. There's still room for this to run all the way to $75 per share. So I'll be keeping an eye on this one. There's this major air pocket and the stock continues to gradually work in that. Always, as usual, great stuff, Jay. Chronicle.
Hey, Fahad. I have TREX this morning, symbol TREX, T-R-E-X, sorry.
Oh, I was just talking about this with my neighbor just yesterday, but go ahead.
If anyone's not familiar, this company makes low maintenance composite decking for homes, which helps to resist weather, staining, mold, pests, all that good stuff. And according to some bulls, this sort of decking is so great that apparently TREX is more in the business of saving marriages rather than the decking itself. Because you're avoiding situations where the wife keeps reminding the husband to go clean and maintain the decks, and the husband keeps procrastinating. But in all seriousness, Baird Research hosted an investor meeting for TREX this week, and the takeaways are pretty impressive. Fahad, you already know how much I love Louisiana Pacific and the housing sector, and these comments from TREX are saying demand remains very strong. First off, the CFO said that he expects stronger than seasonality sales to continue into September, with some opportunities for channel inventory refill in late Q3 and Q4. And they're estimating that the composite market could take another 2 to 3% of market share from traditional wood this year. And the next thing is to do with tight supply and strong demand. TREX did receive some questions during this investor meeting regarding any potential pricing increases in their composite products, to which management said they will be considering it when they review 2021 pricing. It's important to note here that TREX does not face high input costs from wood. So if they were to increase prices, naturally that's going to be significantly incremental to longer term profitability. And lastly, TREX also touched on their increased focus on capacity expansion. The company is in the middle of a $200 million expansion program, which is going to expand capacity by 70%. And it's going to come online by Q2 of next year. So putting this all together, if anyone still doesn't have any exposure to housing in their portfolio, I think this is another stock to look into on any dips.
Yeah, so just a couple things. Funny because you bring this up. My neighbor right next door, 3 years ago, he spent more than $50,000, $55,000 to take down the old wood frame massive deck they have. There's two levels to it. There's a downstairs and the upstairs. There's two-layered deck. They took the whole thing down and they rebuilt it completely using composite material from TREX. It was a $55,000 deck, and it's a really beautiful, nice, big, giant deck. I think I may have actually shared the picture of that. So there was a birthday party recently, and a bunch of other neighbors also got together. And so, one of the other neighbors that was also in the house, he was asking, and I was in the conversation there too, that, how much was this TREX deck? They're thinking about getting it too. And the discussion came up about the cost. And given given what we have seen with the lumber pricing recently, if you look at this LBS chart going absolutely on a tear, nearly more than tripling basically since March low, given the housing strength, the cost differential between traditional wood frame versus TREX has actually now really narrowed. What would really help Chronicle is presenting a simple price chart cost price chart from the consumer standpoint for somebody that wants to get per square foot chart of cost basis for getting a deck made of traditional wood frame versus TREX. And I think that it will be very clear to everybody how the price differential, because the traditional wood price have gone up, the price differential has really come down, and that increases the business basically for TREX. And I think that if the housing market continues to hold up the way it has been, it's definitely going to be very, very positive. Something, a price comparison chart would be very, very interesting to take a look at. While you were talking, I was already trying to search for one. I have so many files, I'm going to dig through, see if I can find that myself too. Don't have it on the fly, but interesting update over there. Avo.
Good morning, everyone. As Fahad mentioned earlier, volume is drying up on the SPY side. It's also coming down on the other indexes as well. So it's getting a little harder to find stuff that is kind of like a short-term plays, and also analyst commentary is more looking forward, further out than immediate, as earnings season is dwindling down to the last few holdouts. So what do I have today is, I had mentioned this before their earnings, Pinterest, P-I-N-S, and I'm just looking at a note from Morgan Stanley that came out post earnings, so 10 days ago. Looking forward to further out. I'll just quote some of the things that the analyst says. Pins is driving, benefiting from accelerating e-commerce and social shopping trends. The key change is now the analyst thinks that Pins has the ad tools to capitalize and deliver sustained, faster than expected growth. And now this is something that was mentioned earlier before the earnings came out, that we know advertisers had pulled a lot of, I don't want to say a lot, but a definite amount of advertising from other platforms, but Pins was benefiting from ad revenue because the advertisers, it's a kind of a different format of advertising that it's tied into what are posted. Now, I've been on Pinterest a couple of times. To me, it's a little bit of a, all right, see, I'm talking negative now. To me, it's a little bit of a messy site, but man, people seem to like it. So what the hell, right? Whatever works. So the analyst goes on to say, we see social online malls like Pinterest and Facebook even becoming even more important touch point for retailers, brands, and merchants, and therefore see ad dollars shifting even faster to these platforms because they deliver, they actually reach shoppers with intent, because the people who are on these websites are looking for something, and e-commerce transactions as well. There's a few other things that go on that the analyst mentions here. Also talks about their revenue growth that accelerated from -8 in April, which is not out of the ordinary, but to plus 50% year over year in July, which is a pretty big jump. I can actually post this in the chat room during the day so people can read it if they're interested. Now, going out longer term, the analyst has a target of $44 on a base case and $60 on a bull case valuation, which implies 70% outside. Thought it was interesting, pass it along, and see what everybody else thinks.
I would just caution on the technical side a little bit. While the chart is consolidated, yeah, and this goes back to the point about volumes drying up, valuations being full in so many parts of the market, macro environment where the S&P and where the levels are in the market not matching up compared to where they were, for example, in pre-COVID levels, and all of that. And then the risk of weak seasonality period that's going to be upon us at some point in September and October, which is going to shake things up before elections a little bit. Now, with all of this said, if one is positioned into this or considering, you want to just keep a very, very hard stop around $34 per share. The stock closed at $35.98 because I just feel like that overall, there's a ton of things that are baked into these stocks, and some of these reports are not responding as positively as I would have expected, considering where they have already gone to. And so, a risk of 5 to 10% correction in the S&P before election, sometime in September, October period, is not going to be completely out of the question. Nothing goes up in a straight line. Nothing goes down in a straight line either. And we could be going into an environment where we basically will not do anything until the elections are over from this point on. There's another school of thought on this one, purely from a technical standpoint, that it's not such a bad, way of thinking about it. It's potentially more prudent to think about it, where the market goes in a sideways, a little bit higher volatility, a little bit of spike, a little bit of a shake off, and basically in a sideways consolidation digestion mode for the next 2 to 3 months. we let some of the macro environment catch up, let some of the fraud to basically come out, and we let some of the risk related to elections and this week's seasonality basically pass by us. And then once we get into the Christmas timeframe during November and December, then we could have a potential another leg higher in the S&P. So, you know, a simple-minded consolidation, not a crash mode scenario, but this could be in play at some point. Now, with that said, going back to Pinterest, you know, this and many other names like this would potentially, high beta names could potentially see some partial gap fills down the road to 27.50 or 30, and that then they could provide a better opportunity. So just be mindful of fading action if we start to see more and more of that. But
yeah, absolutely, and that's why I mentioned initially that you know, I'm trying to analysts are looking, you know, further ahead than immediate. I would expect some of that gap to fill, definitely. If I was holding common in this or even options, I would take profit and wait for a better entry further along, definitely.
Yeah. All right, everybody, thank you very much for joining. All right, my alarm's going off. Thank you very much for joining. Right on time. We're going to close this thing out, and we'll see you in the chat room shortly.